Hello, I'm Dick.
And I'm Eric, and we're the Annuity guys.
Eric, there's some new rules, 2015, that affect rollovers. And there's a lot of things that I think we should talk about. The tax consequences of rollovers, 401ks, in-service distributions, all of those concerns that folks have. But let's talk about this new rollover rule first.
Yeah, it's a limiting factor.
Pretty serious.
Yeah, well, it's a big deal if you don't know it, because it can have a significant impact on your potential tax situation.
Well, like wipe out all of your tax advantages on all of your IRAs if you do it wrong.
Right, exactly. You can get hit with a huge tax consequences. So what happened is the IRS said, starting in 2015, you're allowed one rollover.
60-day.
Right, one 60-day rollover per year.
Yes.
And in this case, and it's a 12-month period. It's not a calendar year. It's every 12 months. Now, when we define rollovers, this is what happens. You take basically a cash withdrawal from your IRA. You take possession of the funds. You can put them in your bank or whatever, but you're taking it. By doing that, you've done a rollover. Now you have 60 days to really put it into another IRA vehicle. And so in that point in time, that's considered a rollover.
Yes.
Now, a lot of times you'll see that there are advisors who like to get access to your money a little bit more quickly, and a lot of times they would be doing rollovers rather than transfers. So
a 60-day rollover.
A 60-day rollover. They're saying, hey, just do a rollover, call up the investment company, have them send you a check, and then we'll put it in this whatever place it is. Well, the reason you need to be aware of this is, here's the deal. If you do more than one of these rollovers in a given year, you have basically voided out
all of your IRAs.
You made them immediately, basically, you have to pay the penalty, and you have to pay the tax consequences.
Yes.
So it's a huge deal that if you're not communicating effectively with the advisor, and the advisor's not asking the right question, you could get hit with a lot of potential penalties.
Well, and let me just say a few things here, Eric, that I think are so important. Folks, the language that surrounds these IRS statutes, and we'll put this one on the website, link to it, and information about it so that you can go look at it with your own eyes. But the terminology is many times called a rollover, even if it's a transfer. So they call it a rollover transfer. And then the 60-day rollover really refers to you taking possession of your own money. Now, understand, there's nothing wrong with that. What Eric and I are saying is be very, very careful that you know it's only one rollover that you've done in the entire year.
12 months.
12 months, correct. And there's some temporary rules that right now affect whatever rollovers you did in 2014, how they will affect 2015. Now, the way it used to be set up was that you could still only do one 60-day rollover per year, but it was per IRA. Now the IRS is aggregating these all together. So if you've got IRAs in 5 different accounts, the IRS for this rule looks at them as one IRA. And if you've made any move of any one of them, which can be confusing, and unless you know for a fact you haven't done it, then there can be good reasons why you may want to liquidate an IRA and do a 60-day rollover and move it in certain situations. But it's different. Eric and I both agree that the rollover transfer, which is considered custodian to custodian, is really the surest way to do it, unless there's extenuating circumstances that are agreed upon.
And let us make this point very clear. A lot of you have 401ks out there, and you're thinking about putting 401k dollars into annuities. Now, there's a way to do this that is not considered a rollover. It's considered a transfer, and that's the custodian to custodian. So we're not telling you that you can't have more than one annuity or you can't transfer to multiple companies.
Right.
The key is how it's performed, the mechanics of it. You need to basically, I think, take a lot of emphasis to make sure it's going as a custodian to custodian transfer so that you don't have any risk or liability of incurring any of these penalties.
Well, and Eric, one of the things that folks get so confused about, and we are always dealing with this, and it surprises me that this question comes up the way it does, but folks are always thinking, well, if I get an annuity and I move my IRA dollars into an annuity, I'm going to have to pay tax. I'm going to have a taxable event. So I don't know if I want to pay the taxes right now.
Yeah, it's a point of confusion, and it's because they think they're taking possession of their money. They're taking a distribution when they're taking it out of their IRA. Well, really what we're doing is we're using an IRA wrapper around the annuity so it still maintains its classification as an IRA, and so you're just transferring.
It would be no different than moving it from a Fidelity over to a Scottrade.
Right.
It's still, you've moved it from one set of investments to another. The annuity is looked at as the same type of thing. It's just another place you're putting your money for your IRA.
Exactly. So it's how you do the disbursement makes all the difference in the world. So in this case, it's not a disbursement, and that's where
distribution,
and those are the key words. And unfortunately, we all have our own little language when it comes to
the withdrawal, the distribution, disbursement.
So if you get a check with your name on it and it goes in your bank account, you're paying the tax, basically.
unless it's one time for 60 days. And another thing you have to be really careful with is inherited IRAs. This is a big confusion because an inherited IRA, you do not get 60-day rollover privileges with. That has to go custodian to custodian. So if you have some money coming to you and it's from an IRA, and the person that's holding that money says, hey, let me write you this check, and you can go roll it over, you just lost all of your tax advantage. And this has happened over and over again. So if you want that to become your inherited IRA, that custodian has to move it to the custodian you choose that money to go to.
That's right. Well, Dick, can you think of any other kind of, rollover rules that we need to tell anybody about as far as annuities and IRAs?
Well, I do have one other thing in mind here, and that is that a lot of folks have 401ks, and they are thinking, hey, how can I get this money positioned now for my retirement? I'm getting close. I may want to work a few more years, but there's a lot of money sitting there, and I want to get this planning started. And a lot of plans do allow in-service distributions, and not all plans do. And there's some little rules that follow it, and so you really want to talk to someone that knows what they're doing, a professional. But it starts with your HR department finding out if you can do an in-service distribution. And so I think that's just something folks need to be aware of in addition to the new rollover.
Yeah, so you're doing an in-service distribution, which is a transfer from your 401k into an annuity. So
which will typically be an IRA.
That's correct.
Yeah, at that point. So